Based on the historical data and forecast, Bitcoin has been experiencing a significant downtrend, with recent prices fluctuating between $62,200 and $78,500. The RSI consistently indicates oversold conditions, particularly on January 30th, February 3rd, and February 6th, with readings below 25. This suggests potential for a short-term bounce, but the overall trend remains bearish. The forecast for the next week predicts continued downward pressure, with prices potentially reaching as low as $59,900. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities within the downtrend. My strategy involves a series of tactical short positions, capitalizing on temporary rallies while managing risk carefully. We will enter a short position at $68,800, placing a stop loss at $70,100 to protect against a sudden upward spike. The initial target price will be $62,300, aligning with the forecast and recent support levels. If the price reaches $62,300, we will reassess the situation. Given the persistent downtrend and bearish forecast, we may consider a second short position at $63,400 with a stop loss at $65,000 and a target price of $59,900. This multi-layered approach aims to maximize profits while minimizing potential losses in this volatile market. Based on the historical data and forecast, Ethereum demonstrates a clear downtrend. The price has been consistently declining from January 29, 2026, reaching a low of $1,810 and currently forecast to continue decreasing to $1,600 by February 18, 2026. The RSI consistently indicates oversold conditions, fluctuating between 18.4 and 32.4, suggesting potential for a short-term bounce, but the overall trend remains bearish. The Bollinger Bands also confirm this trend, with the price consistently trading near the lower band. Therefore, I recommend a short position strategy. Entry price should be $1,830, with a stop loss set at $1,860 to protect against a potential short-term reversal. The initial target price is $1,600, aligning with the forecast price and the lower Bollinger Band. To maximize returns, I suggest a tiered target approach. If the price reaches $1,600, take 50% of the position off the table. If the price continues to decline, let the remaining 50% run with a final target price of $1,670. This strategy combines the RSI signal for potential short-term bounces with the bearish trend indicated by the price action and Bollinger Bands. The stop-loss order provides a safety net, while the tiered target approach allows for flexibility and profit maximization. This is a high-risk, high-reward strategy suitable for experienced investors with a strong risk tolerance. Based on the historical data and forecast, XRP shows a downtrend. The RSI consistently remains below 30, indicating an oversold condition. The forecast for the next week predicts a continued decline, with prices ranging from $1.28 to $1.21. Given these factors, I recommend a contrarian strategy, anticipating a potential rebound after the price reaches a key support level. We will implement a tiered buying strategy. First, enter a position at $1.22, with a stop loss at $1.18. If the price rebounds, target a profit at $1.4. Second, if the price continues to fall and touches $1.2, enter another position at $1.21, with a stop loss at $1.15, and target a profit at $1.35. To enhance the strategy, we'll incorporate the Bollinger Bands. The price is consistently trading near the lower band, reinforcing the oversold signal. We will prioritize the RSI strategy as it provides clearer entry and exit points. The overall portfolio will allocate 60% to the RSI-based tiered buying, 30% to a conservative strategy of waiting for a bounce from the support level at $1.2, and 10% to a band-based strategy, entering at $1.22 and exiting when the price touches the upper band. This diversified approach aims to maximize potential returns while mitigating risks associated with the volatile cryptocurrency market. Based on the historical data and forecast, BNB shows a clear downtrend. The RSI consistently remains below 30, indicating an oversold condition. The forecast for the next week projects a continued decline, with prices falling from $589 to $526. Considering the support price of $586 and the downtrend, I recommend a short selling strategy. We will enter a short position at $589, placing a stop-loss order at $619 to protect against a potential rebound. The initial target price will be $554, aligning with the forecast for February 16, 2026. To refine this strategy, we'll incorporate the Bollinger Bands. The bottom band has been consistently below the price, confirming the downtrend. If the price touches the support level of $586, we will adjust the entry price to $586. If the price breaks above $619, the stop loss will be triggered, and we will exit the position. If the price reaches $554, we will take partial profits and move the stop loss to the entry price to secure gains. If the downtrend continues, we will adjust the target price to $526 on February 18, 2026. This combined approach leverages RSI, Bollinger Bands, and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana has shown a significant downtrend. The RSI consistently remains below 30, indicating oversold conditions, and the forecast predicts further decline. The price has tested the support level of $63.7 multiple times, and the Bollinger Bands are widening, suggesting increased volatility and a potential for further downside. Therefore, I recommend a short selling strategy. We will enter a short position at $75.9, placing a stop-loss order at $86.7 to limit potential losses if the price reverses. The initial target price will be $63.7, aligning with the established support level. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower band, which is currently at $67.6, we will tighten our stop-loss to $73.2. If the price reaches the target of $63.7, we will adjust the target to $69.5, capitalizing on the anticipated downward momentum. This combined strategy, leveraging both RSI and Bollinger Bands, aims to maximize potential returns while managing risk effectively. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, TRON exhibits a downtrend, consistently trading near the support level of $0.274. The RSI values fluctuate between 28.5 and 46.5, indicating periods of oversold and overbought conditions, but generally leaning towards the lower end. The Bollinger Bands show a contracting range, suggesting decreasing volatility. Given the forecast price hovering around $0.276 to $0.277, a conservative strategy focusing on short-term gains near the support level is recommended. Therefore, I propose a strategy to buy TRON at $0.276. The stop-loss should be placed at $0.268 to mitigate potential losses if the price breaks below the support. The initial target price is $0.278, aiming for a small profit within the resistance level. If the price reaches $0.278, consider moving the stop-loss to break even at $0.276 to secure profits and potentially ride the momentum if the price continues upward. If the price continues to fall, we will sell at $0.269. This strategy combines support and resistance levels with RSI and Bollinger Band signals to maximize profit while minimizing risk. Based on the historical data and forecast, Dogecoin has been in a downtrend, with prices fluctuating between a support of $0.0859 and a resistance of $0.0996. The RSI consistently remains below 50, indicating a weak upward momentum, and has recently dipped into oversold territory, below 30, suggesting a potential temporary bottom. The Bollinger Bands show that the price is currently near the lower band, further reinforcing the bearish sentiment. Considering the forecast for the next week predicts a continued downward trend, I recommend a short position strategy. My strategy involves entering a short position at $0.0879. Given the oversold RSI and proximity to the support level of $0.0859, I will place a stop-loss order at $0.0914. The target price will be set at $0.0821, aligning with the forecast for the week and the lower Bollinger Band. This strategy aims to capitalize on the anticipated downward movement while mitigating risk with a strategically placed stop-loss. The overall portfolio will be 60% short Dogecoin and 40% in cash to maintain a balanced risk profile. Based on the historical data and forecast, Bitcoin Cash demonstrates a downtrend with significant volatility. The RSI consistently remains below 45, indicating oversold conditions and potential for a bounce. However, the forecast for the next week predicts a continued decline, with prices dropping to $488. Considering the support level at $453 and the Bollinger Bands, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $490, anticipating a temporary rebound from the oversold RSI. A stop-loss order will be placed at $488 to mitigate potential losses if the downtrend persists. The target price will be set at $504, aiming to capture a quick profit from the anticipated bounce. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it strengthens the buy signal. The portfolio will allocate 60% to this short-term rebound strategy, 30% to a protective stop-loss order at $453, and 10% to a conservative long position at $497 with a target price of $526. This diversified approach balances potential gains with risk management, ensuring a robust investment portfolio for Bitcoin Cash. Based on the historical data and forecast, Cardano has been in a downtrend, consistently testing the support price of $0.243. The RSI readings have mostly been below 30, indicating oversold conditions, but haven't shown a significant upward trend. The Bollinger Bands have been widening, suggesting increased volatility, and the forecast prices continue to decline, hitting $0.225 by February 18, 2026. Therefore, I recommend a contrarian strategy, anticipating a potential bounce from the support level. I suggest entering a long position at $0.244, placing a stop-loss at $0.233 to manage risk, and setting a target price of $0.27 for a potential gain. This strategy leverages the oversold RSI and the potential for a rebound from the support level, while the stop-loss protects against further downside risk. To refine the strategy, I will incorporate the Bollinger Bands. If the price touches the lower band of $0.235, it further confirms the oversold condition, strengthening the long entry at $0.24. The stop-loss will remain at $0.23, and the target price will be adjusted to $0.27. This combined RSI and Bollinger Bands approach aims to capitalize on short-term price fluctuations while minimizing potential losses. The strategy prioritizes a cautious approach given the prevailing downtrend and the bearish forecast, focusing on small, well-defined gains. Based on the historical data and forecast, Chainlink is exhibiting a clear downtrend. The price has been consistently declining from January 29, 2026, and the forecast for the next week indicates further downward movement, potentially reaching $7.15. The RSI consistently remains below 30, indicating an oversold condition, but the downtrend is strong enough to override this signal. Given this, I recommend a short position. Enter a short position at $8.34. Set a stop-loss order at $9.08, just above the recent high of the Bollinger Bands to avoid being trapped in a short-term bounce. The initial target price is $7.47, aligning with the forecast for February 16, 2026. However, we should also consider a secondary target based on support levels. The support price is $6.28. If the price breaks through $7.47, adjust the target price to $6.28. This strategy combines technical indicators and price forecasts to maximize potential returns while minimizing risk. The RSI indicates potential for a rebound, but the overall trend and forecast suggest a continued decline. This layered approach provides flexibility and allows us to capitalize on both short-term and long-term movements in the price of Chainlink. Based on the historical data and forecast, Kaia shows a downtrend with recent price fluctuations. The support price is consistently at $0.0553, while the resistance is at $0.0617. The RSI values hover around the mid-40s to mid-50s, indicating neither strongly overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. The forecast for the next week predicts a price range between $0.0503 and $0.0561, reinforcing the downward trend. Therefore, I propose a short selling strategy targeting a gradual decline. My strategy involves entering a short position at $0.0543. The stop loss will be set at $0.0556, just above the recent high and support level, to limit potential losses. The initial target price is $0.0503, aligning with the lowest forecast price. If the price reaches this target, we will reassess the situation. If the price continues to decline, we can adjust the target price to $0.0498, which is the lowest price in the historical data. This approach combines technical indicators with forecast data to maximize potential returns while managing risk. Based on the historical data and forecast, Zcash demonstrates a clear downtrend. The price has consistently fallen from $353 to $240, and the forecast indicates a continued decline to $198. The RSI consistently remains below 50, hovering around the oversold level of 20 to 35, confirming the bearish momentum. The Bollinger Bands also support this view, with the price consistently trading near the lower band. Given this context, I recommend a short selling strategy. We will enter a short position at $212, placing a stop loss at $240 to protect against a potential reversal. The initial target price will be $203, aiming for a quick profit from the anticipated downward movement. To refine the strategy, we will utilize a dynamic target based on the support level. If the price reaches $203 and the RSI remains below 30, we will adjust the target price to $198, aligning with the forecast. If the price touches the support level of $233, we will immediately close the position to prevent further losses. This layered approach, combining technical indicators, forecast data, and support/resistance levels, aims to maximize profit while minimizing risk in this strongly bearish market. Based on the historical data and forecast, ZKsync demonstrates a fluctuating trend with periods of both upward and downward momentum. The RSI consistently remains below the oversold level of 20, indicating a lack of strong selling pressure. However, the forecast suggests a potential downward trend with prices hovering around $0.02. Considering the support price of $0.0211 and the recent dips, I recommend a long position when the price reaches $0.0203. Place a stop-loss order at $0.0185 to limit potential losses. Aim for a target price of $0.0245, coinciding with the recent resistance level. This strategy leverages the potential for a rebound from the support level while mitigating risk with a conservative stop-loss. To refine this strategy, let's incorporate Bollinger Bands. When the price touches the bottom band of $0.0185, it signals a potential buying opportunity. Enter a long position at $0.0203, set a stop loss at $0.0185, and target the upper band of $0.0311. This approach combines RSI and Bollinger Bands to identify potential reversals and maximize profit potential. The final portfolio will prioritize the Bollinger Band strategy, as it offers a more dynamic and responsive approach to market fluctuations, with the entry price of $0.0203, a stop loss of $0.0185, and a target price of $0.0311. Based on the historical data and forecast, DoubleZero is exhibiting a clear downtrend. The price has been consistently declining from January 29, 2026, to February 11, 2026, and the forecast for February 12, 2026, to February 18, 2026, projects a continuation of this downward trajectory. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with several days dipping into oversold territory below 30. The Bollinger Bands also confirm this trend, with the price consistently trading near the lower band. Therefore, a short selling strategy is recommended. My recommended strategy is to short DoubleZero at $0.0772. Given the strong downtrend and the forecast, a conservative stop loss should be placed just above the upper Bollinger Band, at $0.08. The initial target price should be $0.0582, aligning with the forecast for February 18, 2026. However, if the price breaks below the support level of $0.0748, the stop loss should be adjusted to $0.075, and the target price can be increased to $0.05 to capitalize on further potential declines. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Convex Finance has shown a volatile trend with periods of decline and recovery. The RSI values fluctuate around the mid-range, indicating neither strong overbought nor oversold conditions consistently. However, the recent dip in RSI to 34.5 suggests a potential oversold scenario, and the forecast indicates a gradual upward movement. The Bollinger Bands show that the price is currently near the lower band, which could signal a potential rebound. Therefore, I recommend a moderate long position strategy. Entry price will be $1.79, with a stop loss set at $1.55, aligning with the established support price. The initial target price will be $1.88, based on the forecast and the middle Bollinger Band. To refine this strategy, I suggest a dynamic approach. If the price reaches the initial target of $1.88, we will adjust the stop loss to $1.83 to protect profits. Furthermore, if the RSI reaches 80 or the price touches the upper Bollinger Band, we will consider taking profits at $1.9. This multi-tiered approach allows for capturing potential gains while mitigating risks, capitalizing on the forecasted upward trend and the potential for price volatility. This strategy aims for a balance between risk and reward, suitable for achieving high returns in the current market conditions. Based on the historical data and forecast, Aster has shown significant volatility, with a recent downtrend followed by a potential upward reversal. The RSI indicates that the asset is currently in the oversold territory, with values fluctuating between 30 and 58. The Bollinger Bands suggest that the price has been trading within a range, and the recent movement towards the upper band indicates increasing bullish momentum. Considering these factors, I propose a long position strategy with an entry price of $0.588. We will set a stop loss at $0.535, just below the recent low, to limit potential losses. The initial target price will be $0.694, aligning with the recent high and a potential resistance level. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI crosses above 50, indicating a shift from oversold to overbought conditions, we will consider adjusting the target price to $0.721, targeting the resistance level. Conversely, if the price touches the lower Bollinger Band and the RSI remains below 30, we will tighten the stop loss to $0.50 to protect against further downside risk. This dynamic approach allows us to adapt to changing market conditions and maximize potential returns while minimizing losses. The strategy combines trend analysis, momentum indicators, and volatility bands for a robust and adaptive investment approach. Based on the historical data and forecast, JasmyCoin has been showing a downtrend with increased volatility. The RSI consistently fluctuates around the middle range, occasionally dipping below 30, indicating oversold conditions but not sustaining them for long. The Bollinger Bands have been widening, suggesting increasing price volatility. The forecast for the next week predicts a continued downward trend, with prices hovering around $0.0054 to $0.0056. Given this analysis, I recommend a short-term contrarian strategy focusing on potential rebounds from oversold conditions. My strategy involves entering a long position when the RSI falls below 20 and the price touches the support level of $0.00495. The entry price would be $0.00495. A stop-loss order should be placed just below the support level at $0.0048 to limit potential losses. The target price will be set at $0.0056, based on the resistance level and a potential bounce from the oversold condition. This strategy aims to capitalize on short-term price corrections while mitigating risk with a tight stop-loss. The portfolio will allocate 60% to this strategy, 20% to a strategy based on the RSI, and 20% to a strategy based on the Bollinger Bands. Based on the historical data and forecast, Sonic exhibits a clear downtrend. The price has been consistently declining, with the RSI consistently below 30, indicating oversold conditions. The forecast for the next week projects further declines, with prices dropping to $0.0363. The support price remains steady at $0.0405, and the Bollinger Bands are widening, suggesting increased volatility. Given this analysis, I recommend a short position strategy. We will enter a short position at $0.0458, placing a stop-loss order at $0.0412 to protect against a potential reversal. The initial target price will be $0.0363, aligning with the forecast. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI reaches an oversold level below 20, we will consider covering the short position, even if the price hasn't reached the initial target. Conversely, if the price touches the bottom of the Bollinger Bands at $0.0328, we will consider tightening our stop-loss to $0.0388 and adjusting the target price to $0.0363. This dynamic approach allows us to capitalize on short-term fluctuations while maintaining a focus on the overall downtrend. This portfolio combines the trend analysis, RSI signals, and Bollinger Bands volatility to maximize returns. Based on the historical data and forecast, LayerZero shows a generally upward trend, bouncing around the support price of $1.9. The RSI indicates periods of both overbought and oversold conditions, currently hovering around 61.5, suggesting a slightly overbought condition. The Bollinger Bands show that the price is approaching the upper band, indicating potential for a pullback. Considering these factors, I recommend a long position with an entry price of $1.89. A stop-loss should be placed just below the support level at $1.79 to mitigate potential losses if the price declines. The initial target price is set at $2.03, aligning with the forecast and the upper Bollinger Band. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI. If the RSI falls below 30, indicating an oversold condition, we will add to the position at $1.76 with a stop-loss at $1.61 and a target price of $1.85. Conversely, if the RSI reaches 80, indicating an overbought condition, we will consider taking partial profits at $2 and tightening the stop-loss to $1.94. This adaptive approach, combining trend analysis, RSI signals, and Bollinger Band guidance, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Berachain has shown significant volatility, with a recent strong upward trend in the last few days. The RSI has crossed above 50, indicating a potential bullish momentum, and the forecast prices suggest a continued rise. Given the current conditions, I propose a long position strategy. The entry price should be $0.585, coinciding with the first day of the forecast period. The stop-loss should be set at $0.434, below the recent low, to limit potential losses. The initial target price is $0.727, aligning with the forecast price and the upper Bollinger Band. To maximize returns, I suggest a dynamic target price adjustment based on the Bollinger Bands. If the price reaches $0.727, consider moving the stop-loss to the center of the Bollinger Bands, around $0.674, to lock in profits and allow for further gains. If the price continues to rise and touches the upper Bollinger Band, consider taking partial profits at $0.846 and adjusting the stop-loss accordingly. This approach combines the RSI's signal of bullish momentum with the Bollinger Band's indication of overbought conditions, creating a balanced strategy that aims for high returns while managing risk.